I just wondered, how did you find time during your college days to trade? Did you have to bunk? Because we didn't have apps those days.
Yeah, no, I mean, I didn't really do well in my college.
Okay.
So, I mean, that probably tells you that, yeah, I didn't spend too much time in my college. And yeah, so my HOD had called my mom, I don't know how many times, and told that Nithin has some problem, you need to fix him. So,
Okay.
yeah, so I did. I mean, I did compromise on my education for trading, and which I started quite early.
Oh, wonderful. So Nitin has solved many problems that we in the markets have faced, forget the problems during your younger days. The journey itself has been fantastic. We are speaking to Nithin Kamath, the man who's created a platform that's transformed the way we trade, that's transformed the capital markets through technology, brought in some very big flow of investors, large number of investors, and challenged the conventional way of trading. I guess you are the biggest now in terms of active trading.
Yeah, I mean, we don't really care about biggest or smallest,
Right.
but yeah, we've been. I think we've contributed. We contribute the most number of active traders, volumes on the exchanges.
Right. So, we know the journey, as I
Right.
was saying, the kind of growth, the revolutionary changes that's happened. And after Zerodha became a success, we had so many others, Upstocks, Grow, etc., etc. My question is, what's been the kind of learning over the last 12 years as far as the investor, the common investor is concerned? Matlab, anybody who would come in, आज मैं trade करूँगा, कल trade नहीं करूँगा. I'm sure there must be people who get in and get out of the markets. So what's been the most important learning?
No, see, the thing is, when we started the business, we started with an idea that we want to help traders kind of get over the basic problems, which was, costs, right? As in, for an active trader, the brokerage costs were high, so we said we need to solve for it. Broking as a business is very opaque in the way they work, so we said we need to make it transparent. This was really, what we started the business as a problem statement. As the business grew, we said we need to educate people because the financial literacy is quite low. So that's how we started Varsity and all our education initiatives, which has done quite well. Then it became about the platforms, right? We said, it's not enough to have low-cost transparency and education. People need access to better tools, utilities, better platforms. And that's where, Kite, our in-house app, started. Then we said we can't build everything ourselves. We probably need to collaborate with others to build newer type of products, right? And that's how Rainmatter started, and our collaboration with fintech startups building, platforms around trading and investing on top of us. But I think, eventually over the last 2-3 years, the question we've been asking is, we've done well as a business, but has the customer done well because of us, right? I mean, we've attempted whatever, but has it really helped him do better with the money, right? I mean, eventually, the reason I think we exist is for our customers to better with their money if we were not there, right? I mean, everything else is really,
Absolutely.
I mean, no point, right? I mean, what is the point of having low cost if customers are going to lose money on it, right? So,
True.
And that, the learning has been is that the real problem to solve is to help people do better with their money and not really just everything else. We assume that having everything else will somehow automatically solve for the money, doing better with the money problem.
Sure.
I don't think it has. I mean,
Right. Yeah,
we've been very lucky, in this journey because, there were so many right plays, right times, and we had an underlying bull market, right? One of the main reasons for our growth,
Absolutely.
right? From 2010, it's been, like a bull market itself. I mean, it's kind of hit peak volatility, peak momentum in the last 2-3 years, but it's a bull market because otherwise, it's very hard for a broker to do well if the underlying markets aren't conducive as such. So, yeah, so coming to your questions, I think we need to figure ways to help people do better with the money is something that we have learned, after 11, 12 years of running a business.
One question that keeps coming to my mind is that, even Rakesh Junjunwala used to keep on saying, trading is a zero-sum game.
Right.
So from the data that you would have really gone into and your teams would have gone into, have traders made money?
Yeah. So the thing is, okay, now you need to qualify who's a trader. Okay.
Okay.
So like, when someone asks me, Nithin, who is a trader? I say anyone who's entering a stock with an idea to exit is a trader.
Okay.
Right? I mean, exit 1 day, 1 minute, 1 year. If you're entering with an idea to exit, it's a trade. Right? If you're, like if you buy a house to live in, that's not a trade because that's an investment. You intend to live there forever. Right? And, so when you buy into companies thinking you want to be in this journey forever is really an investment. Everything else is a trade.
Sure.
Right? Now, within the trades, there are short-term traders and a little longish traders, right? So when I say short-term traders, people who almost trade for a living, right?
Okay.
Where they're either
Depend on the cash flows for them.
either depending on the cash flows or they use significant portions of their personal resources and time and income towards trading, right? I mean, these guys qualify as active traders for me.
True.
Right? People who do F&O trading, who do intraday trading, or even short-term trading, but very actively.
Right.
In that audience, which is maybe 10% of total audience,
Right.
I mean, this is a very small audience as a percentage, but they contribute almost 80-85% of the volumes on the exchanges.
Right.
Because, that's Pareto's principle of sorts. Right? And so this 10% audience, I would say, I mean, public about this. I've tweeted about this, saying 1%, less than 1% of the people in this audience have made more than bank fixed deposit returns over the last 2-3 years. So, active trading is an extremely hard thing to do. The odds of being successful is very low. It's almost like running a business. Like if you pick up 100 people who started a business, people who have succeeded and who survived are actually 1 out of 100. After 2 or 3 years. So trading, business, sports, music, I mean, these are high skill, high risk kind of games, professions. And to succeed, you need a lot of skill and also you need some luck, right? And yeah, so trading isn't easy. And I keep talking about it saying, the only thing easy about trading is opening a trading account. So it's just that there is, one of the problems I've had, generally with the ecosystem over the last 2-3 years is while there's been a large amount of growth, it's come on the back of wrong expectations set on social media, right? As in a lot of people have made it seem like it's quite easy to make money trading, which is what has triggered so many more people to come to the markets.
Correct.
Right? Now, while this is good for us in the short term, but I think it's actually bad for the business in the long run because these people who came with the wrong expectations will get disappointed at some point of time. Right? I mean, they'll realize, it's not easy to make money, and someone, kind of misled me into believing that it's easy to make money. And once they're disappointed, they're unlikely to come back again.
Right.
Right. So you can soon have a generation of people who came to the market suddenly become inactive, disillusioned by the markets, and saying about, no, I don't want to invest in the markets now. I'll just do bank FD or whatever. Right. So
true.
So short term, it's good. It's been good, but I think personally, this whole wrong expectations that got people into the markets in the long run is going to do damage for the entire broking industry. So there is, I don't see great outcomes because of that.
So which means that let me shift focus to the broking business itself. From what you're telling me, the example was some 10 crore people came in. Post pandemic, the IPO boom was there. People were borrowing to invest there. Now some of them have gone out.
Right.
Okay. So are we looking at a scenario where we are exaggerating the number of people coming into the market? All kinds of projections are made. If I take the whole as a percentage of GDP, we still say that we are not penetrated.
Right.
Is there a risk for businesses? Will the brokerage business itself grow in that same kind of proportion?
See, the thing is, I'm usually, like a lot of my peers tell me I'm very pessimistic to be an entrepreneur, but I think of myself as a rational optimist. Right? And I'm usually factoring in the worst case outcome. So, I don't get disappointed because if I get disappointed, I'll probably not do the business well. So so how big is Indian markets, right? As in today, while there are 10 crore total number of people who have Demat accounts, the active number is around 3.5 crore, right? Active means, someone who's traded at least once a year last year, right? So it's not such a large audience. I think some of the growth we saw in the last year in terms of user growth was also fueled on the back of some of the VC money, right?
Yeah.
So VCs were spending a lot of money, so some of these startups went and gave free stock with an account, free T-shirt or whatever, So when you give away freebies, in this country, there'll be people who will game the system, So
Right.
so I think some of that bump you saw in users without really the bump seen in the active trading participation is fueled by the VC money of sorts, And now the thing is, how do you look at India as a target market size as a stockbroker? I mean, anyone who comes to the stock markets needs to be in a position to be able to, needs to have some disposable income at the end of the month to be able to save, invest, right? Now, how big is that audience in India? We had 5 crore, people filing income tax returns. Assuming there are 3 times of that, are people who have money in their account. That's 15 crore Indians, right? So, and there are 3.5, 4 crore Indians who are actively, investing. So that is almost like a 25-30% penetration, right? So can the markets grow at the same pace as we did in the last 1-2 years? I mean, I would say unlikely, no. And internally, what we think is broking industry in terms of participation in the long run can maybe grow at 15% year on year, which is I think which is still a little optimistic in terms of our expectation. This is assuming your underlying markets do well,
Yeah.
right?
Yeah.
Because if you go back to 2007 when the last big bull market happened,
Yes.
right? I used to be a sub broker back then, and everyone's was the conversations in 2007 is that somehow broking industry will grow forever,
Yes.
right? And the number of demat accounts we added in 2007, we added the same number only in 2017.
Oh.
That means for 10 years we had a degrowth. So we actually added lesser accounts than what we added in 2007. So the all the broking industry is a very high beta kind of a company. So so our fortunes are completely dependent on the underlying markets. So usually when someone asks me, Nithin, what do you think your business will do? My usual question will be, can you tell me what Nifty will do?
Yeah.
Because if they can tell me what Nifty will do, I'll probably,
Yeah.
my business will probably mirror the performance of the Nifty. So.
Right. So very clearly then, in that case, if you're, typically, the bull run brings more people, like crypto brought more people into it. Would you be diversifying into other areas where fintech would be useful at this point in time? Because this is only one part of fintech,
Right.
because financial inclusion is so huge.
Right. Yeah. No, I mean, see, the thing is, today, apart from helping people do better with the money, the other goal for the business, we get up every day and we say, India needs to financialize. We need more Indians to be, moving away from assets like gold, real estate, which doesn't add to the economy, to, kind of start backing Indian entrepreneurs, right? As in kind of financialize those assets of sorts. So and I don't think India is ready for everyone to be investing in stocks directly.
Right.
I think the right stepping stone is maybe a fixed income product, right? Which is a little more riskier than fixed deposit, but a higher return than fixed deposit, but lower risk than stocks, right? It's a stepping stone. So we want to, we are partnered with a couple of startups for this, through Rainmatter. We internally, I mean, there's a lot of push from the government, and even SEBI is quite active in terms of trying to figure ways to make fixed income more popular in the country, right? So that is something we want to definitely give a shot at. I mean, we still don't have an answer on how we will make this popular.
Mutual fund platform?
Not mutual funds. The thing is, I mean, of course, you can.
Mutual funds are very expensive. From that perspective, if you are looking at fixed income,
right?
Would you look at mutual funds?
No. So we've applied for an AMC license. So we're waiting for our final approval. So we will kind of extend the business into being an asset management company as well. Then we have this fixed income thing. We have a loan against securities product, but we don't talk about it too much because I don't think it's really the right product. But for retail investors, so it's like a hidden feature at Zerodha. But apart from that, we, like I said right earlier. So I mean, we get up every day thinking one of the reasons we exist is also to help Indians financialize, which make it easier for Indian entrepreneurs to raise money in India. right? Because if we introduce the concept of investing, saving, backing entrepreneurs to Indians, Indians will find it easier to generate, raise capital locally.
Right.
Right. If Indians are able to raise money locally, then wealth creation happens locally, right?
Absolutely.
One of the problems of the last 10, 11 years of startup, whatever growth is, all the wealth creation has really happened outside, right? As in, if you look at what is the Indian holding in the entire startup ecosystem, it's probably less than 15%, right? 85% wealth creation is actually happening outside. And that, and we as a country can't become inclusively rich and wealthy if all the wealth creation happens outside, right? So the belief is if we do well as a business, we will probably get more Indians to back more Indian entrepreneurs, and which can in turn help the country do better. I mean, this is, like I said, one of a North Star of sorts, as a business, and which keeps us very motivated and focused on doing well. So, will we go do random things as a business? We won't. I mean,
Right.
we will only do things which kind of sit in the philosophy of these 2 points: help people do better with the money, and get more Indians, backing entrepreneurs. I mean, if it kind of falls in this framework, we will probably go attempt it. So we won't start a credit card business. We won't start an unsecured lending business. I mean, absolutely no.
Absolutely, yeah, I understand. So talking about financial inclusion, the way transactions are made, whether it's 5 rupees or 10 rupees, everything is changed completely.
Right.
So much so, today the RBI is coming out with e-rupee.
Right.
The pilot project is on, and soon it might go retail. But they do have a problem, the chutta problem,
Right.
because if there is a transaction of 543, I think they can't issue 43, they have to issue only 500.
Right.
But have you applied your mind on this emerging kind of financialization, if I can call it?
Right.
Have you applied your mind there, and what's your response on e-rupee?
Right.
Before I
No, I think the central bank currencies, I think it's just a matter of time before every country has some central bank currency of sorts. I mean, I think I was just reading that today morning that even in the US, like 12 banks, have gotten together to float like a e-dollar of sorts.
E-dollar kind of,
So I think the power is quite a bit. So I'm like, for example, like the best use case is all the subsidies today, right? You don't know if the money is really being used for the right thing.
Correct.
So like a central bank currency, like a digital currency, will solve for that problem, right? All the leakages that potentially could be happening there. In the real world, especially in India, given our payment systems, I don't know how incrementally like a e-rupee versus a normal, because makes a big difference actually, right? As in today I can send you money in like a second using
Correct.
UPI,
Yeah,
right?
yeah.
What does e-rupee incrementally help me do, right? As in, it doesn't really, I mean, I can't really see like a large use case for it, but there is a large use case for the government,
Yeah.
if you think
Through
about
its own
subsidy
subsidies.
and their own programs, so but for like people like you and me, I mean, I'm still not sure.
Yeah, we are already digitally.
Absolutely,
You have
yeah.
money in your account, you make the transaction.
Yeah, I mean, we're all on UPI anyways, doing instant transfer. So, like,
Instant.
how does life change for us? I mean, so, but it'd be interesting to see how this plays.
How this plays out. So talking about instant transfer, one area, today I can send money instantly, within few seconds. But the share transaction doesn't happen that way, even in the spot market. If I can send money instantly through IMPS, why can't we do away with T+2?
Right. Yeah, no, it's actually quite complex, the underlying mechanism
Right.
that's involved, right? As in, because when you send money to me, it's a one-to-one transfer.
Correct.
Right. But when you transact on the exchange, it could be many to one,
Right.
Or many to many, right? And the parties involved there, like for example, there are intraday traders, right, who might sell to you and buy back at the end
No,
of
I'm
the day.
talking only about cash.
Yeah, but
transaction.
but you don't know who is on the other side of your
Other
trade.
side of the trade. Okay.
Like you came and said, I want to buy 100 shares of Reliance,
Right.
right? I could be one guy on the other side who has 10 shares in my demat who said, I will deliver. But the remaining 90 could be an intraday guy who sold it to you,
Right.
and then buy it back, right? As in, so it can never be instant, because you don't know how many counterparties are there. So the way stock exchanges work is you come at a net settlement at the end of the day. You say who is the actual person who sold to you, and then debit it from the person's demat account.
Right.
But the good news is that we are already in the we are transitioning from T+2 to T+1.
Correct. Yeah.
Right?
The pilot project is.
It's not pilot. It's already.
Almost
It's all. But next
for
February.
some 100 stocks.
Yeah. Next February, next March, I think we will be completely.
T+1.
Like the entire country is on T+1, right? And we'll be, I think, the first country in the world to go T+1.
Yeah.
Right. So now the thing is, with money transfer, you can use the money instantly for something.
Correct.
Like, but this share transfer, what will you do with it? Like, it doesn't even, even if I could instantly give you stocks, what will you do with it, right? It doesn't really incrementally, create like a large benefit of sorts as well. So I think T+1 is optimal, right? Because if you want to do it instant, the complexity, like I said, that exists will just go up infinitely.
Absolutely.
Right? And the only way instant can happen, or even T-Day can happen, is if you say, when you're trying to buy, only people who have stock in the Demat account.
Absolutely.
But then you will then create two liquidity pools.
Correct.
Right? There will be one place where all people who are doing day trading will be, potentially trading, where there'll be a certain price, and then you will have another price. Right? And two liquidity pools.
So price discovery will.
Correct. Yeah, it will go.
So it's not desirable.
It's not desirable as well.
Absolutely. Okay. So talking about regulator, talking about, I think our regulator is among the best in the world, very clearly. There's no doubt whether it's SEBI or even CCI for that matter. The next question comes to is, SEBI is experimenting with many things. They are saying that ASBA, the money block for IPOs, the same methodology can be brought to this thing. Do you think that will work? Because right now there is a lot of float money that's happening.
Right,
even there SEBI is trying to tighten. Do you think ASBA will work? It's a draft proposal.
Right. Yeah, see, the thing is, I think what SEBI is bothered about is brokers being part of the fund flow. And, given the legacy of what brokers have done in India, right? We have historically had brokers who've defaulted. And when brokers have defaulted, securities now with all the regulatory changes are safe, because securities always sit in customer Demat account. But the funds which are lying with the broker is at risk if a broker were to default. Right? And SEBI has been thinking, I don't think it's about float income, it's more about ring fencing the customer from the broker risk. Right? And that's how this whole ASBA, I think, conversation must have started. And the issue with this is, it's okay for people who are actively investing.
Right.
Passively investing. Because, if you want to say today decide to buy Reliance, you say, like how in ASBA you click on a mandate and you say, mark this funds to the broker or the clearing corporation and then place an order. But the issue is, even with the IPO mandate, the failure rates are quite high, right? So an active trader cannot be in a situation where he's not able to buy or sell a stock because the mandate request didn't happen, right? I don't think the underlying framework is ready for this to scale at the level at which stock market works.
Okay.
Right? Stock markets, in the 6.5 hour window has tens of millions of transactions, and it's very concentrated. Right?
Okay.
In the first 30 minutes, you might have 5 million or 6 million transactions. Now, if 6 million transactions went in 5 minutes for mandate request, do we have the network, the infrastructure capability to actually, kind of work at that scale? I don't think so. I don't think there's anything out there anywhere in the world that can scale like that, right? So especially given that there are interdependencies now. There's a broker, there's a clearing corp, there's a bank. How do you do get everyone to do talking to each other in microseconds, millions of times? So it's a big open risk, right? But potentially it could be an option to the user. Like you as a user has an option. If you want to do mandate, you do.
You can give it mandate.
Right? But if you're not able to do mandate, maybe you transfer funds in, trade. I think, maybe in the next 1-2 years we will end up seeing some regulation like that, right? Versus mandating all transaction to happen through a mandate.
Right. So that brings me to the next question: our market infrastructure. Assuming that we are growing, Nifty will go up, come down, bull markets will happen, bear markets will happen. We will come back at some point. Our market infrastructure, is it strong enough to look at, let's say, 10 years down the line? Since you have created a huge infrastructure, how do you see our market infrastructure?
We've done phenomenally well, right? and not just the exchange, depository, CC infra, but even the broker infra. Because last year, not last year, and COVID happened, right, between March to April, May. If you look at downtime of broker, because that's when we had peak activity,
Yeah.
right, March, April 2020. Like, there were brokers in the US who were down for like hours and hours together. Like, I mean, I think we had like a 5-minute downtime in the entire
Not
2 or 3
more than
minutes.
5 minutes. I think,
Yeah, you know, so I mean, as Zerodha, as an exchange also, if you look at it, you know, historically, I mean, the downtimes have hardly been any, you know, so, right, I mean, so I think we are there. I mean, of course, you know, exchanges also are constantly working on upping their technology as well. I think now there is almost, with a new chairperson at SEBI, you know, there's a mandate for everyone to,
Yes.
you know, scale and be ready, you know, like all the time of sorts. So I don't think there's an issue in terms that, you know, suddenly there were not 3.5 crore Indians but 7 crore Indians actively trading in the markets. I don't think you know, I don't think any systems will really choke of sorts. You know, I mean, I hope so. I mean, but these things are tough to call. But I don't. We haven't seen it in the past.
We haven't seen it in the
Yeah,
past.
you know.
True. Nothing to an extent where we had to shut for a couple of days. You know, the more important questions, coming back again to investors, you know, for the younger audience. They, I mean, today there are people who have 30% of their income which is disposable. They still want to invest. What's your advice to them?
Yeah. No, I mean, see, the thing is, I think you know, we need to lead our life, right? I mean, it's like a lot of people get so carried away into this and not lead their life at all. I mean, I say saving and investing is super important, but you also have a life, you know, as in, you know, you need to spend money, enjoy, experience, travel, right? Because, you know, you have all the money in the world, you know, and you're very old, maybe you'll not be able to do some of these things, right? Which you can do when you're younger. So I think saving and investing is super important. And how much percentage, I think it's contextual. It's very tough to give one number to everyone.
True.
But I usually keep talking about how it's important thing, especially for the younger audience, I mean, like people who are in their 20s and 30s, is how technology is taking away a lot of jobs. Right? You know, technology is just making things more and more efficient, and medical progress is, you know, increasing the lifespan.
Correct.
Right. So what it means is, you know, by the time today's 20-year-old is 50-year-old, it might find very hard to find a new job at 50. In the sense, you know, it might, you know, we're already seeing it actually.
Yeah, we're already seeing it.
You know, if you look at the tech community, etc., because people who are doing software programming, if they didn't upskill themselves, right, suddenly they, you know, get up one day and they're like, you know what, all my skills that I have is of no use. Right, which means you can potentially end up having a large audience forced to retire early, but then, you know, the lifespans being much later. So, for example, what if the, you know, retirement age drops from 60 to 50, and the average age expectancy goes from 65 to 80?
It's already become visible in the latest trends we are seeing it. Yeah.
So you have 30 years of like a funding gap, right? I mean, historically for India, real estate helped, right? Because, you know, Indians, we've always invested in real estate. Real estate had a mega bull market for 20, 30 years. So, so that somehow created a retirement corpus for most people. We also had like this mega bull market. So you also kind of, you know, it's unlikely that such returns can be generated in future, right? Because the world has become so much more efficient that it's harder to make money, be it real estate, be it stocks or wherever, right? As in, so I think people have to be cognizant that real estate may not help you create a retirement corpus, and maybe even, you know, the way you cannot expect a 15-20% return over
a period of
20,
15
like 20, 30
no,
years.
which is what you know, we were having a newsroom chat, you know, so the question came to my mind. All these mutual funds keep saying that, look, your 10 lakhs will become 1 crore or whatever over a period of time. I mean, I'm assuming always that there will be a 15% CAGR,
right.
You know, which is a very tough ask.
I mean, I think in today's world, it's really, really hard. No, I think, because see, the thing is, even when companies are coming IPO today, right, they're almost priced in for perfection, right? I mean, they've already factored in next 4 or 5 years of growth in their pricing, right? Even in the VC community, even in, say, startup investing, right? As in, when we started startup investing in 2015-16, we were meeting startups like with an idea and presentation, saying I don't know where the business will be. But today, if you want to invest in a startup with an idea and presentation, they've already factored in the next 3 years growth on a presentation, and the valuation is on that. So it's become hard. It's become very hard to make money as an investor across the board, and even for fund managers, I think the information asymmetry is going away in India,
Yes.
which means that like active fund management being able to beat passive. I mean, I personally question, if that will happen. So if someone's deciding that they want to invest for the next 20, 30 years, I'd say maybe picking up an index fund versus
Index fund would be better.
would
Because
be
the
better.
best of the companies get into the index over a period
Yeah,
of time.
right.
Absolutely.
And then and I think active fund managers will find it really hard to beat the index in the long run.
Which is where I was wondering, when I talked about the mutual fund platform, I had that in mind when I told you. Okay, so talking about startups, would you be looking at, let's say, how difficult is it to fund a startup today? You have started funding startups, because I'm sure you will be looking at something completely different,
Right.
something better than Zerodha,
Right.
I suppose, if you are funding. What kind of people come to you?
Right.
What kind of funding would you like to do?
Yeah. So the thing is, we don't. So when we started Rainmatter in 2016, which is our fintech fund incubator, whatever you can call it, the idea was that we wanted to partner startups who can help grow the capital market ecosystem in India, right? And I mean, that was the objective. The objective was not I'm investing in it to generate returns on the capital. The objective is what is the impact those investments can have to help the ecosystem grow. And there was an agenda that if ecosystem grows, it'll also help us grow as well, right?
Right.
I mean, it's not that, but it was not a 1:2. I want to invest money. And we're not like a traditional investor, right? And we have never raised someone else's money. It's our own money that we are allocating. So with Rainmatter Fintech, that's been the thesis. I think we have like around 30 companies, some of the coolest fintech, investment tech startups in this country, working on savings and investing, etc. Part of this portfolio. Along the way, as the business did well, we decided that we will support. We did well, so we said, we need to do more than just helping startups in capital market ecosystem. We said we need to be investing some of the success into future. Right. I don't like to call it charity, but our team keeps telling me, say, invest for the future or giving it forward of sorts, which is, we said we will help for-profits and not-for-profits working around climate change, livelihood, creation of livelihood, etc. And that also started. We call it Rainmatter Climate, through which we are doing. And the third pet thing project for me has been that we need to find ways to make Indians, make it easier for Indians to make healthier choices. Right? As in,
that's a very important one.
Yeah, right. So we are investing to partnering companies which are making it easier. Like for example, I love my chocolates, but I'm very conscious about the composition of the chocolate. How much sugar in it, and etc. So we've invested in like 2 companies. One is Whole Truth Bar. Another one is called Ditch the Guilt. They've just made like a healthier version of a chocolate, right? As in, and both are doing quite well. And so that's been like a side pet project. But these are generally the 3 themes: fintech, helping grow the capital market ecosystem. We are not interested in lending, etc. This is around savings and investing, helping do better. Then second theme is around climate and creation of livelihood, and the third, which is a small subset, is really health. Making Indians be more conscious about health and making healthier choices easier.
So in all this, there is one line of thread. If anyone looks at profitability, I'm sure you would have also gone through that phase.
Right.
The moment you start looking at profitability, you get worried. Whether you should pursue or should you step back.
Right.
So how do you navigate that question which keeps coming every now and then? Because at least you should be able to make the cost of capital that is put in, right?
Yeah, I mean, see, the thing is, I think the over the last 5-6 years, there has been so much excess liquidity available for businesses, right? As in, and it's probably because of the US, right? As in,
Correct.
them printing
They
a lot
printed,
of money, yeah, right? So a lot of liquidity has chased every part of the world. So everyone postponed the event of profitability, right? They said, if money is available easily, why don't I grow as much as I can grow right now, and then think about profits?
True.
But like I think about it, if I was an entrepreneur in the shoes of a lot of my peers, I would probably think about it that way as well, right? As in, if I'm able to raise so much money for growth, why not show the growth and raise money and then think of profitability later? Right? Yeah, I mean, it's logically, people will do what is most efficient way of making money for themselves, right? And but the issue is that's not a sustainable way to run
And
a
that
business.
funding curve is turning.
Yeah, I mean, I think a lot of people didn't think that. I mean, they were just so carried away thinking that the funding will continue to happen, and they will be able to slowly transition from no profits to for profits, to making profits. But in India, the challenge is a customer once is used to free stuff, it's very hard to make money on it.
Sure.
To transition, right? Some of these UPI platforms, I think when they added that convenience fee of 1 or 2 rupees for
Yes.
for postpaid, whatever, right? Sorry, for prepaid mobile, whatever add-ons.
Yeah.
There was so much almost like a reward saying, we won't pay you that 1-2 rupees. As in, you'd assume why would people care about 1-2 rupees? But it's just that people are so used to doing it for free.
Yeah, freebies, low cost, that happened in telecom. It's happens with password sharing for Netflix. They took a huge hit because of that one. Coming back to one very important question is, which I don't know whether I should ask you at all. Are you going to look at the IPO route for your future growth?
Right. No, the thing is, our business is generating cash, right? As in, and we don't have any large ambitions. We don't have an ambition to build a large lending business. Like today, if we had to go raise money, right, it would be to do something new for which we already don't have the money, right? Which is, so since there is cash flow and there's enough money to do whatever we have our ambitions set on, we don't need the money. And the second thing is, philosophically, we have said that we will never spend to acquire a customer. Right? And one of the reasons there is so much cash flow as a business is also because we have never spent money on advertising or marketing, right? So we don't need the money, but it's also borderline hypocrisy if a stockbroker who's telling everyone to go list on the exchanges and create wealth for everyone says, what, I don't want to list.
Right.
The other problem we have for the business is there is no predictability.
Right.
I mean, if you when you ask me, Nithin, if you were to ask me, Nithin, what will you do over the next 3 months? I have no clue. Right? Everything, all the fortunes are dependent on the underlying markets, right? And I think the company has an obligation to be predictable once it goes to the stock markets, right? Because you're getting retail investors who cannot take risk on your cap table, and you need to be fair to them. You cannot just go IPO at a low price and say, what, I'll create wealth, because people will automatically bump up the price, and wherever transactions will happen wherever, right? As in. So the issue is that the issue is there is no predictability today because our revenues are mainly from broking transaction revenue. So maybe in the future, when the dependency on broking transaction revenue is not as much and we have more annuity type of income contributions, maybe at that point we'll think about IPO, and I think it's still some time away.
And the AMC business, I suppose.
But it's hard to make. It's hard to make money. Because if you're doing passive AMC, you're charging 20 bips. And if you get to 100,000 crores of AUM, you'll make 200 crores in revenue. So
absolutely.
It's hard to make money there.
Yeah. One very important question: your team. I'm sure some of you would have been around for a very long time when you started just out of college.
Right.
So who's your core team? Your brother, I suppose, is
absolutely,
brain behind trading.
So when I used to be a trader in the markets, I started trading in the late 90s. Nikhil is 7 years younger to me, and he joined me, I think, in like mid 2000s, and he was a better trader, and So when we started Zerodha, the plan was that he continues trading, and if Zerodha didn't work as an idea, I get back to trading. In the process, we would have gotten a membership on the exchange, so we would have saved on the cost that we were paying to our brokers.
Correct.
That was really the idea. Right. But the other key people in the business are, when we started, Venu, who heads our operations and compliance. I mean, he's been a friend for, I don't know, we were staying in the same apartments. Nikhil and him are the same age. So he was there from day one. Then Kailash, who heads our tech, he joined us in 2013. He's been like one of the biggest reasons for our success, because he's the one who's helped us transition from financial services to a fintech firm. Because he's the tech, in all of this. Then there is Hanan, who heads our support. Then Karthik, who joined us in 2012, 13, 14 to build Varsity. And then, we have an extended core team, which is almost like 7,500 people on the team. People where we are their first jobs, they've stuck around for a long period of time. And
wow.
So we've been very lucky that people.
So attrition is not eaten into.
Yeah, I mean, attrition has been from the tech team, we've lost 2 people till date.
Okay.
And even within the core team, I think 4 or 5 people over the last 12 years. So, I mean, I think one of the main reasons for the success of the business is also because we've all stuck together. And I think looking back, I think the reason we have stuck together is because it's all mission driven, and the mission isn't to make money. Because when the mission is to make money, it's easy to derail. So
you get lost.
Yeah, and because all of us think about like what I said, our mission as a business is. It kind of keeps us going. And now with the Rainmatter Foundation and everything we're doing in terms of investing for the future. So it's kind of also checking the box of a lot of people in terms of, it's very fulfilling of sorts.
Absolutely. I think that mission is going to be the next big achievement. I think from Zerodha, you've become Herodha, and wish you all the best.
No,
you and your team.
Thanks. Thanks a lot.